Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hi, and welcome to the Finovate podcast. We are continuing our conversations with FinovateFall's Best of Show winners. That event obviously took place in September of this year. Joining me today, we have Frida Liebowitz, CEO and co-founder of Debbie. Frida, thanks so much for taking the time.
Thank you for having me, Greg. It's good to see you again.
Yeah, likewise. So for anybody who hasn't seen your demo, can you give us just a quick introduction of yourself and kind of what Debbie is all about?
Sure. So as you mentioned, I am Frida. I'm the co-founder and CEO of Debbie. And our mission with Debbie is to help people break the behavioral cycle of debt for good. And so with Debbie, we are building the first rewards platform for debt payoff that is entirely behavioral driven. We reward people for building up better habits, paying off debt, and eventually making their way to long-term debt freedom.
Yeah, no, it's a really cool product, and I would encourage anybody to go and take a look at the demo itself. You can find that on our YouTube channel or at finovate.com. But watching Frida and her partner Rachel give the demonstration, I think is well worth your time. Now, before we dive into the technology, which we are going to get into, I know you came into this space kind of on the back of a personal experience that obviously left an impact on you. Can you talk a little bit about that personal experience and how it kind of got you interested in this space?
Sure. So, fortunately and unfortunately, the debt problem has been something that was near and dear to my heart for a very long time. And that's because I pretty much experienced it ever since I could remember myself. I grew up in a family that was immigrant, single parent. My mom never went to college. She was financially illiterate because she really didn't have the resources. And so when we had just moved to the US, showed up in Brooklyn, New York, the very first thing she did as part of the living the American dream is open up a bunch of credit cards, right? So every time we went to Walmart and Target and Macy's, they were like, hey, you can get 20% off today for just opening up all these credit cards. And she was the perfect victim for these offers. And very quickly we got into this terrible cycle where we were living beyond our means, constantly paying extremely high interest. And this wasn't just limited to credit cards, right? Eventually we expanded. And what's interesting is that for me as an adult, even though at that point I was super lucky, I got a scholarship to go to NYU to study finance, out of all things. But I still fell into the same exact pattern. As soon as I turned 18, I opened up a bunch of credit cards and started spending. And by the time I was 20, I already had $15,000 in credit card debt. Now, the reason why I fell into the same cycle was really because personal finance is just not something that we talk about outside of the house. So my friends were not talking to me about it. I had no idea how other people are spending or whether or not they had credit cards or what kinds of credit cards they have. And B, really, if you think about personal finance, it's more behavioral than anything else. So even though I was at NYU learning how to put together very complex, DCF models and bond models and whatnot, I still didn't really know how to apply it to my own personal financial life. And I just followed the same patterns I saw at home. And so I had, struggled through that. What was like super surprising to me, right? As I was sort of figuring things out. And I actually realized that debt was not the best thing ever. And I wanted to get out. And I started looking outside of my little bubble. I had learned that I wasn't alone, right? That 40% of American families struggle with credit card debt and revolve. They don't pay their bill off in full. And not just that, but that problem starts really early because 30% of American college students have credit card debt. That means that before we're even adults, before we even start our lives, we're already dealing with this problem. And that's really what eventually inspired me to get into the space and start Debbie.
Yeah, and I mean, I think one of the things that strikes me about that, as you mentioned, this is actually something that's a really commonplace occurrence, right? And it's something which people don't talk about. And I think people in the financial technology industry in particular probably haven't had a lot of these experiences themselves. And so we tend to discount how commonplace this actually is. But there are huge numbers of people who struggle with this, and it can be a lifelong struggle. It's so easy to fall into this trap and so difficult to get out of it. I think the next question I have for you, there's obviously a lot of tools that are designed to help people recover from this debt. But, as you mentioned in your demo, it's not something that's been historically too effective. How do you think Debbie can succeed in this space where other companies have tried and not been successful?
Yeah, so you're exactly right. Kind of hit the nail on the head, right? You're looking at a space that the debt freedom space is not new. And sometimes people hear debt freedom and they're just like, oh, we've heard this before. Like, this doesn't work. And you look at the last 5 to 10 years, there has been, a higher number of debt freedom startups and debt freedom companies, or even traditional financial institutions trying to launch debt freedom products, more than ever, but the problem hasn't been solved. And the reason for that is that the industry is solving the wrong problem. What happens is that the people who are trying to solve this problem, like you said, a majority of them have not been indebted. This is something that I experienced when I myself was working in the industry at Marcus by Goldman Sachs, building consumer credit products. And what I learned is that most folks there, because they hadn't experienced debt, they were looking at it as a math problem. They were trying to solve debt in Excel. So like, let's just put all your debts in here. Let's just try to get you out. But in reality, when you are someone who's been through it, and that's really where my angle came from, you understand this is not a math problem. This is a behavior problem, right? The way to solve this is not just to tell you, hey, we're going to build some automation tool that's going to pay off your debt in the best, fastest, cheapest way. The way to solve it is not to throw a whole bunch of cash at you and be like, hey, let's refinance at a lower rate. Those things are important. Those things are helpful. But if you want to help someone achieve long-term debt freedom, and really what we've been focused on, you need to solve the root cause. You need to teach that person, like, how do you stop yourself from spending more than you earn? How do you stop yourself from, when you're at Walmart and you're looking at the 2 TVs, buy the smaller one, buy the smaller pizza, right? But just have that self-control and have better money habits. So yeah, I think that's kind of where we really have distinguished ourselves from the rest of the debt freedom offerings.
No, I think that's spot on. You're right. It's a human problem more so than a math problem. And I think a lot of people in fintech come into this space because we're good at math, right? You're good at computers. It's very logical, this sort of, very progressional type of thinking. But obviously the real world is muddier. People and human beings are incredibly complex. How can you give some examples of kind of how that experience has kind of changed the way that Debbie looks, like how you've been able to incorporate some of that human side of it into the platform itself?
Sure. So we talked about this at the demo, and I think it really resonated. And we mentioned this a lot. We like to call ourselves the Noom for debt payoff. And for those who aren't familiar with Noom, it's one of the leading companies in the weight loss space. And the reason why we love comparing ourselves to the weight loss space and comparing ourselves to Noom specifically is because when you look at the human experiences between weight loss and debt loss, the psychology of it is almost identical. There are very similar patterns there. Again, it's a very human behavior issue, and it's things that usually form very early on in our childhood, right? A relationship with money, a relationship with food. Those are things that are very primal almost, right? You form them without even noticing. You just see them at home and you absorb it. And Noom in particular, they had done something really interesting where they came into a space that was also super crowded at the time. When they came in, there were so many solutions already. There was Weight Watchers, and there was a million crash kale diets that offered you to have just this shake and you lose 3,000 pounds in 2 days, right? And all these things. They were the first ones that said, no, we're going to take a completely opposite approach. We're not going to start counting your calories. We're not going to tell you, why like that a cookie is bad for you. Instead of that, we're going to take the longer way, but the way that's actually going to get you to win. And we're going to teach you about yourself. We're going to teach you about your habits. We're going to walk through a behavioral psychology curriculum. And so we really basically looked at their model and were inspired by that and created a very similar model for the debt freedom space, where our program really, instead of just asking people to learn about what's an APR, what is compound interest, those things are important and we like to weave it in. But we talk a lot more about, where do your spending habits come from? What have you seen at home that caused you to relate to money the way you do? And then helping people also unwind those things, unwind the bad habits, build better ones, and use and all of that. We really, I think with us, like we have like our unique rewards twist on top of it. And when we realize that micro rewards, micro incentives are super, super powerful in helping people form better habits early on and stick to them. And once you can get them to do them for a couple of weeks, the likelihood of them sticking is so high. And so that's really like the insight that we've had and how we built our product.
No, I think it's spot on. And the parallel between the fitness industry is actually, it's pretty easy to see, right? It's the same kind of thing. You've got somebody who maybe knows they need a little bit of help, but they struggle to understand how to make a substantive change in how they're doing, how they're doing business, how they're looking after their personal health. I mean, I think if you look at the stock price of Peloton is actually, I think, says a huge amount about Americans and their fitness habits. If you go and look at the last couple of years, there's this giant progression all the way up, and now it's all the way back down. It's back basically at zero again, because people as much as they are interested in health, they kind of have this almost fad-based view of it, which is, I'm going to do something for the next 6 months. It's going to be great. But ultimately, if you can't get that to become a lifelong pattern, you're going to end up right where you started again. Those same basic behaviors are going to be there. So I think that's a really smart thing that you've been able to do. And obviously it resonated well from the Finovate stage. I think the proof is in the pudding, so to speak. I shouldn't have said pudding after all this talk about healthcare and things like that as well. The proof is in the kale smoothie. Pudding. Yeah, the proof is in the low-calorie kale pudding that'll help you lose 3,000 pounds in 2 days. But the bankers that you were able to obviously resonate with, your message really struck them. Can you talk a little bit about what the reaction has been from the banking community since your time on stage in New York?
Yeah, so my co-founder was kind of making a joke that I thought was very relevant. She said that we kind of felt like the bells of the ball. It was a super fun time. I think we definitely had a lot of people at our booth before and even more after the demo. We got a lot of interest. I think people were very excited by the different offering and by the fact that we're solving a problem that is so relatable for so many people, and something that's it's so real. It's a real just survival, basic human need kind of problem. So people get very excited about it. And then not just, besides for the show itself, we actually got it kind of created this like ripple effect. And then we had a lot of people reach out to us afterwards. We had a lot of really, really great follow-ups. One of the main reasons why we came to Finovate was to start getting our name out there in the financial services industry, but something that we hadn't done before because we were strictly direct to consumer until then. And so it was really exciting to see that the financial services industry received this really, really well. And folks, now we're in conversations about different kinds of partnerships. So yeah, it was definitely much better than we had ever expected.
No, and I think I could see sometimes a surprise in your face when I handed you the trophy at the end of the day. I could tell it wasn't something that you necessarily saw coming. But when you talk to the banks, do you get this sense that they look at you as kind of the next fad, so to speak, or do you get the sense that they're really starting to understand that maybe the way that they've historically been looking at this area is flawed, and that do you get a sense that they're open to the strategy that you guys are trying to create?
I definitely think it's more of the latter, because what we're saying is we're fundamentally changing the way banks think about financial wellness, the way they think about impacting the performance of their customers, members, whoever those may be. And I think they understand that what we're building is sort of like, it's futuristic in that way, right? We're building a very unique reward system, something that doesn't exist today. The only rewards that you see in credit is rewards for spending more on your credit card, right? Right. And I think, and actually one of the really great podcasts that I did as a follow-up from Finovate was for a risk magazine, which was very interesting. So they wanted to take a risk spin on it. And that was something that, like, the woman who was interviewing me, she talked a lot about how there are different new innovative ways of thinking about risk and how Debbie fits into that category. And that's something that's definitely like a long-term trend. It's not something that we started, but it's something that we're definitely at the forefront of. So I think you see the industry slowly moving there. It's sort of like the next generation, I think, of financial wellness. That's something that we've been sort of put into that category. So it's kind of a combination of financial wellness and risk management. Those two disciplines almost merge together a little bit. And so I really think that we're seeing more as like the next wave of innovation in fintech, which is hopefully something that's long-term, fingers crossed.
Yeah. Well, and hopefully a lot of the bankers that you're talking to recognize that there is a different strategy that's needed here, because I think, this intersection between this risk and kind of consumer credit, consumer help is not a place that's historically been a very common breeding ground, right? These are kind of two sort of separate disciples inside fintech. And so to see you blending those together, I think is really positive. Last couple questions for you. I think one thing that was really interesting to me, you guys are still really early on in your company evolution. And I know we talked about this kind of in the run up to the show, briefly talked about it on site, but what has the last couple of weeks been like for you all as you sort of have found yourself thrust into this spotlight? Did you feel like, were you ready for all that attention? Do you find yourself with a lot of, kind of early stage company growing pains that you have to sort out? I'm just really curious to hear how things have been going.
Yeah, 100%. It's definitely one of those things where you just kind of get thrown in the water and then you have to swim.
Yeah.
Debbie, we just like our first birthday was a couple weeks ago, like 2 weeks ago, maybe. So
Okay.
we're very early, and we only launched our beta program, like our actual consumer app, in March. So we haven't not been around very long, and we're also a group of very young founders. So we don't have like a ton of experience. We're very motivated. It has its benefits, and it also has certain things that make it a little more, has its challenges. I'll say it like that. So for example, like one of the things that we found ourselves all of a sudden scrambling to learn was sales, because before Finovate, we had never done sales. We didn't know how this works. So we showed up at Finovate, a whole bunch of banks came to talk to us. I'm like, well, I guess now we need to figure out, how do we do sales? How do we talk to them? What does the process look like? So literally yesterday I get on the phone with like one of our investors, and I'm like, who has experience in sales? I'm like, give me a crash course. Like, tell me what I need to do. So it's kind of it's been fun though. I think definitely that's part of the startup life. I'll say we thought we were ready for it. Probably weren't as ready as we wanted to be, but we also kind of, at this point, we know the drill. We know how it works. And so definitely post Finovate, it's been kind of like fast tracking our growth and fast tracking our learning, really. So it's been fun.
Yeah. No, I think that's great. I'm glad that there's people who can kind of give you some expertise there, because certainly, it's the startup community. I think this is one of the things that it can do really well, is provide resources to early stage companies and help, companies get ideas off the ground like yourselves, where there are going to be obviously holes. You can't know everything as you start a company. And so you need to be able to get that information from somewhere. If there are people who are listening to this and kind of wondering how they might be able to get involved, either to help you out or just to learn more about how you approach this problem, what would you say you're kind of looking for at the moment?
Sure. So as I mentioned, really for us, it's about getting our name out there. We've done a really good job in the direct-to-consumer space, and we built our name for ourselves in the debt freedom community, on Instagram, on TikTok, and Facebook. And now we need to build a name for ourselves in the B2B community. So if anybody listening to this knows any financial institution that might be interested in something like this, that might have aligned values and a mission alignment with us, I would love to connect. And yeah, I think that we're gonna keep riding this awesome wave.
No, I hope it goes as far as you want it to take you, because it's a really interesting product. Again, as I mentioned at the top of the episode, anybody who's interested should absolutely watch their 7-minute demo, get a sense of exactly how the product looks, and hear them as they pitch it. It's a really compelling demo, obviously, as you can tell from the fact that they won Best of Show. So I'm afraid we'll have to leave it there. But Frida, thank you so much for taking the time to chat with me, and congratulations again on your success.
Thank you, Greg.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.